All right, I'm going to be straight with you. If you're not using this Fibonacci retracement tool, you are doing yourself a massive disservice and leaving huge potential profits on the table. And you're going to be kicking yourself for understanding how simple this tool is. It truly is some sort of voodoo, and I absolutely love it. Stick around, I'm going to show you how to use it. Yeah, what is up, guys? Texie from UnityTradingGroup.com. Thanks for stopping by. And as I said, the Fib retracement tool, it is a key element of my trading strategy. Same with ads. Many of the guys that we have mentored over the last few years find this to be just an incredibly helpful tool for your trades. So we're going to go through and we're going to talk about the beginner requirements of Fibonacci. If you'd like me to develop a little bit more of a detailed trading strategy for you, understanding more specific entry triggers, exit triggers, risk management, profit take levels, let me know in the comments below and I'm happy to record that for you. But we're not going to get too detailed in this video. We're going to go over what is the retracement tool, the settings, understanding how to draw them in the correct way, because I got asked this the other day. When you draw your Fibonacci's in the right way one time, they will often be accurate for many days, weeks, and or months to come. They really are that well defined, the levels that it spits out once you draw them. Because when Leonardo Fibonacci developed this many hundreds of years ago, he found this specific sequence of numbers that are relevant everywhere in nature, in our universe, and they just so happen to be relevant, these particular numbers, in our trades as well. So as I said, it's almost like voodoo magic how this works. It's incredibly accurate and an incredibly wonderful free TradingView tool. We are very blessed to have this. So what are retracements? So retracements is this: when we understand that we have some bullish momentum in a market and we see a swing up and a pullback, a swing up and a pullback, this area here, this pullback, is simply another word for retracements. People are taking profits at these levels, and the aim of Fibonacci is for us to draw them accurately in the right way to understand where selling pressure may decline and people will start to buy back in to continue the trend. It's that simple. There's nothing more to it than Fibonacci retracements. Let's just call it the Fibonacci pullback tool, because what we want to do is when we understand where people are starting to take profit, we want to A, know the levels where people are taking profit, and B, know the levels where people may be looking to average in or head back in to the trade, so we can piggyback on the back of that and ride that sucker up and make those profits. So let's have a look at how we identify, one, where to draw Fibonacci the right way, two, how to find it in TradingView, and of course, three, the settings. So we're looking at the Bitcoin USD one-day chart on Bitfinex, and you can apply this to really any asset. You will find that the more liquid the coin is, or the more higher cap the coin or the asset is that you are trading on, the more respected these levels will be. If we've got a very low liquid shit coin, it's not going to be as well respected, or it might be a lot more volatile than something like Bitcoin or Ethereum or XRP and an FX pair, for example. So let's have a look here. 1, 2, 3 on the way down in your TradingView account, hit the arrow and you'll be presented with all of these Fib and Garn tools. It's this one here, which of course I have favorited, Fib retracement. So let's just pull it here just to have a look at the settings. So this is what you'll be presented with when you first see Fibonacci. Now, I've got some custom settings here, which are the way that we do our Fibonacci. So take a screenshot of this and put in these settings. These are the ones that matter most to us. You may find that those settings are not relevant to yourself, but certainly for the last, 5-6 years that we've been trading with this is the standard for us. The key ones being the 38, the 61, the 1, and the 23. So those are your settings, bookmark those. That's what we're looking for. And the reason why we've got these green ones highlighted is because these are the major, let's say, psychological levels that people are looking for on Fibonacci to confirm a trend. So let's pull that. So what we're looking for, we are understanding that Bitcoin has bottomed here on this level on the 22nd of July. We started falling mostly from the 9th of May and we recovered here. Even though we've got this wick to the downside here, I am more inclined to use levels where we've got let's say more organic candlesticks. I don't really want to be pulling Fibonacci down to these wicks because I would much rather do it to a confirmed candle like this. So we are always drawing from left to right. We are drawing from our swing high where price last consolidated before the major dip, and we are pulling to swing low, left to right, where price has confirmed a bottom. We've had a beautiful bullish engulfing candle here, and we have now understood that we have reversed the downtrend and we are back in bullish territory in an uptrend where we have headed back down, and we sit down at this point here. So I'll show you how we do this. Pull your Fibonacci, draw from swing high, and you can do a combination of candlesticks, candle wicks rather, and candle bodies. I kind of like to amalgamate the two. So you will find that there might need some slight adjusting when you draw it in, but for yourself, draw it from your wicks to your wicks and see what happens and adjust accordingly. Nothing needs to be precise to the dollar. You need to be within the range because we're looking for areas of interest, not exact dollar amounts. So swing high, down to swing low, and that is our level here. Immediately, you can see how well these levels have been respected in terms of pullbacks or retracements. This one's a little bit different because we have just front run that area, but certainly this is an accurate representation of how to draw your Fibonacci's. So what we are looking for, even if you had been presented with just this information here to the left hand side before any of this started to eventuate, you would see that we had a pull down to our swing low, we had a pull up to our 38, we had some consolidations, another hit of our 38, another retest twice of the bottom of our Fibonacci, and then we headed up and we finally broke that 38 level. And if we draw across, let's have a look at this. And this is the reason why, as I said, when you draw your levels of Fibonacci in the first place, you will often find they don't need to be adjusted. So let's pull it across and see how, if we had just drawn that level in, how well these levels would have been respected since May. Pretty crazy, right? That goes to show you the significance of this tool. We drew it from the 8th of May to the 20th of July 2021. It's now the 11th of January 2022, and we have had our Fibonacci respected over the last 8 months, 6 to 8 months. It's pretty spooky, right? It's pretty crazy how this works. So let's talk about, let's talk about this. So when price pulls back, we've hit up, we've hit here, we've created this bottom, we've broken out of this range, and we've now bounced above the 38. Because what we often find when it comes to Fibonacci is that these levels are pretty significant. So let's talk about these three levels here. What I will find around the 23 is that we often have consolidation before we make our mind up. You can see that we've sort of consolidated here between the 38 and the 23 before we made our decision to go back down and retest this low. We double bottom from here or triple bottom from here. We've head up, we've had a little bit of a fake out across the 38 because the 38, anecdotally, at least from what I found over the last few years, loves to be a level for pullbacks. Price loves to pull back to the 38 before a decision is made on whether we continue up before what is called this golden pocket zone, which is the zone between the 61 and 50 Fibonacci. Now, what do these levels mean? This just means it's let's call these percentages: 23% of the move, 38% of the move, 78% of the move, 127% of the initial move. So that means that when we've come up here and we've hit the 78, we have we've not retraced, but we have recovered 78% of the original move from the swing high. From the previous high, we've recovered 78%. Now, as you can see here, once we've hit this level where we've come down, we've made this sort of W formation, we have come up and we have consolidated around this golden pocket zone. Because what you will often find psychologically from a trader standpoint, that many people will be looking at the same thing as you. Once we get a break above our 50 Fibonacci and especially our 61 zone, we can be pretty confident that we are off to the races unless something dramatic happens like what we had here. And you can see, think of this very, very simply. We break the 38, we're looking for the 50. We break the 50, we are looking for the 61 as the next level for potential pullbacks. We break the 61, we are looking for the 78 as the next level of potential pullback. And we have seen that. This is we're looking at the daily chart here. but prices pulled back, and that's a 7% move. So if prices pulled back from the 38, we would instinctively be looking, as a beginner trader, mind you, more advanced styles of Fibonacci trading, which I can put in the next video, would give you a little bit more of a level of confluence that perhaps we're not going to hit this this 23 level, which you could do something through your moving averages, for example, where we have a moving average cluster. So that would give us an understanding that, hey, we are headed up, we've got a bit of a moving average cluster here, the 23 is going to be front run, but we can make a decision, because once we are using our Fibonacci tool, we can either use that as the last part of the equation or the first part of the equation. We can draw in all of our TA and levels of support, resistance. We can overlay a couple of indicators and then draw in our Fibonacci to give us an understanding of whether the levels we have put in are relevant to Fibonacci, or we can do Fibonacci first and then start layering it in like a cake. Your Fibonacci comes first, then your levels of support and resistance. For myself, I would rather put in my own TA, my supply and demand, for you, it might be your levels of support and resistance, and then overlay your Fibonacci tool to say, yes, what I've done is correct, this aligns well, and I know that there's a strong level of support or resistance at this particular level. So once we've come up, we have broken through this 51 golden pocket zone. It would be the 70 where we would be looking to either A, take profit at this level, or exit out of a position, depending on what the candle here showed you. You can see we had a pretty heavy sell-off, and we found a level of support. We retraced to our 50 fib. We came back up, we pushed up towards our 61.8, and we retraced down to our 38 Fibonacci, where we consolidated for a short period of time. We saw two very nice bullish engulfing, or very nice daily and bullish engulfing candle here as well. A slight consolidation, and then an ultimate move back up towards this high, and indeed making new all-time highs for Bitcoin. So it's pretty simple in its essence how Fibonacci works. So that's the key of this, is when we have found a confirmed bottom, just to highlight, pull from swing high to swing low, and we are looking for pullbacks at each of these levels where we can ride the wave up, take profit, look for levels of support, go up, take profit, look for pullbacks and levels of support from here. So again, if we're using our moving averages, for example, you would see that we have our 200 MA, which aligns very well along with our 38 Fibonacci. We then have our steamroller looking in, our RSI has breached into bullish territory. So we've got a bullish RSI cross. We've got 200 MA support. We've got a nice daily bullish engulfing candle and confirmation from Unicorn. We know of all three of those indicators there that the Fibonacci aligns well with what our other indicators are saying. Our MACD has crossed over. There were three levels of confluence along with our Fibonacci support, telling us that this was the right level to enter this trade. Very, very simple. Very, very simple indeed. So let's have a look at this when we are pulling from a swing low to a swing high. So what happens here is that when we have a confirmed pullback level, we're not looking, for myself, if this was the only information that I was presented with, let's say this, for example, people would say, well, why wouldn't you draw it to this swing high and then look for levels at this swing low? Well, this is the last swing high before price started to pull back seriously. We don't want to pull from the first, or we do want to pull from the confirmed bottom, but we don't want to pull it to the immediate swing high, because we have more data above us that we can use that gives us more significant levels of pullbacks where we can look to average in on a position. So swing low to swing high. Remember, when we're in an uptrend, swing high to swing low to confirmed bottom, and then we are looking for pullbacks. When it comes to something that's already got some bullish momentum, we are looking to draw from our swing low to our swing high. Pull it across. What does that data give us? Look at that. It predicted the exact top on Bitcoin. And what we find, because once the levels have gone past our level of previous high, we have 127% of the original high. So what we find is when we have levels that are broken above our previous high, this 127 extension often signifies a pretty significant level more times than not, in my experience, where we have pulled back. So let me repeat that. I have found more often than not, when price hits to the 127 extension, I often find that price pulls back from there. I would say 7 to 8 times out of 10. And second to that, if we had found price had left this original low and had started making new lower lows, I often find that the minus 27% acts as a level of support, at least a level of consolidation. If there's real weakness in the market, your 61.8 is kind of the final stand for your Fibonacci. But more often than not, these are pretty significant levels of support and pretty significant levels of resistance in my experience. So let's not call that the gold standard, but I've done thousands of trades in my time using Fibonacci, and I find that more often than not, these 127 levels are significant, very, very significant. So again, let's pull back. We're looking from our swing low to our swing high, and let's say that's the only data that we have. We don't have any of this data to the right hand side of this line as of yet. We can see that when we pulled back pretty significantly, our 38, lo and behold, became the first initial pullback level and a level of support. And you can see that we've had this kind of price action to the left hand side. You would agree, I think most times, more often than not, that the previous levels to the left are giving you an indication of what would happen to the right hand side. So you can see that we consolidated between our 38 and our 23 level. We didn't have the steam to break 28, so 38 then becomes the next level of support. We broke the 38, the 50 then becomes the next level of support. And again, if you want to see more accurate representations of how I would enter at this point, setting my stop loss levels and other indicators that I would use along with this to confirm my entry 100%, leave a comment below and I'm happy to record that for you. So as we said here, we've come back down. We weren't able to break the 23. Our 38 became the next level of support, and ultimately that 50 level became the strongest level of support for us. And we can even see as we pulled from swing low to swing high, when we retraced from this level, our 61 became a very strong level of support. So you can see here just very quickly as well, we've held around the 50. We've got a 50 RSI bullish momentum. MACD has crossed over. And even if you were to put on your, let's say, your Fibonacci from this point here, you will find, if you're using something like Ichimoku, for example, that your cloud top will align with the 50 Fib as well. Just another level of confluence to give you. So let's pull across here, swing low, swing high, boom. So that gives us our level, that gives us the exact top, and it gives us back to being here at this very significant level of the 50 Fib as it stands right now. So let's have a look at what it would show us if we go from swing low to the ultimate swing high. You can see that the data there is not as accurate. So what you would maybe want to do is look to pull from the last swing low, which is the last confirmed bottom, because you can pull from here if you want to. Like, you can definitely do that, but you can see that it just doesn't, it's probably a little bit too much to take in. So what you would do, again, as I said, pull from the previous low here up to the previous high, and then from there we can see that our levels are far more respected as to where we stand. So, you know, here's a pop quiz for you. If we can't hold this level of support here, where would you think that we would head from there? I think it's a pretty accurate representation. We would fall back towards this 32,000 level, which is the 127 extension, which lines up not exactly with our previous low, but it certainly lines up in the right area, being being this, which would be a demand zone that we would be looking at like this. So it certainly aligns well with a previous level of liquidity where we had our previous push or our demand zone. It lines up pretty well with that level as well. So those are some very, very simple examples of how to use the Fibonacci tool. 20 minutes And I think that would make you quite a lot of money if you watch this and devour this in the way that you need to. So let's qualify our major points one last time. When we have a confirmed uptrend and we know that the bottom is in, we are pulling from the last swing high to the last swing low. You can pull your levels across if you find that levels are respected. Happy days, keep them as they are, don't need to change them. Our key levels are our 61, 50, 38, with our 23 often acting as a level of consolidation before we make the move back to the original low, or we consolidate and make our way back up towards this golden pocket zone, or this next level being the 38. In very short, if we can't break the 38, we look for the 23 as a level of support. Again, once one level is broken, we are looking to the next level as a level of resistance, or when we pull back, we are looking to the level below as a level of support. Really, really simple stuff. Next, if we know that we have a confirmed top, we are drawing from swing low to swing high, and then looking for retracement levels where we might look to jump in on the move. Bang. Immediate top called by Fibonacci, almost to the dollar. We were $100 off the original top from the Fibonacci. We have not overlaid any other tools at this point here. One, yes, you can draw from the final swing low to the final swing high, but you might find things don't work out as well. So what would you do? You would find the next major low from there, which is this last immediate low, and pull from swing low to swing high, and you can see how well these levels have been respected from that. Key settings you can play with inside TradingView. These are the key settings. These are the numbers that we use every day in all of our trades, and the way that we'd like to have things set out. It's as simple as that, guys. There's really nothing more to it from that. Let's not keep things, convoluted and more complicated than what they need to be. That's a very simple representation of how to trade with Fibonacci. Again, if you want to see more detailed information on the other indicators that I use and my key requirements for trading with Fibonacci, the levels and the things that I look for before I enter or exit, leave a comment below. Happy to share that with you. And guys, thank you so much for watching. Take care. See you soon.